An alarm bell is ringing in the global silver market, and it's coming from the world's largest physical trading hub. This weekend, Shui Bei, China's massive gold and silver marketplace, saw prices for physical silver spike threefold in just 48 hours, according to dealers. Why? Because they can't get enough metal. Deliveries are now delayed by 30 days as they scramble to find supply. This isn't just a price jump. It's a symptom of a much larger crisis unfolding in plain sight. Welcome to the Great Silver Squeeze of 2025, and this time, it's fundamentally different. Chinese gold-silver markets, news headlines about Shui Bei price hike. Shui Bei retail and wholesale market premiums on 1 kilogram investment bars that normally trade at spot plus 2 to 3% are now plus 10 to 12%, and delivery queues stretch 2 to 3 weeks, dealers say. Mine supply is forecast to fall another 1% in 2025, while industrial demand is expected to grow 6 to 8%, so the deficit widens to approximately 250 million ounce. The perfect storm, deficit meets demand. For years, silver has been called the poor man's gold, a monetary metal that dances to the tune of inflation and interest rates. But that story is incomplete. The new, explosive driver for silver is industrial and monetary. China is not officially out of silver, but deliverable metal in the right form, 15 kilobars, is effectively sold out at current prices. The Shui Bei premium and the global price spike are likely to persist through Q4 2025. We are in a structural deficit. That means for years we've been consuming more silver than we're mining. Where is it all going? Into the very fabric of our technological future. Every new electric vehicle, every solar panel, every advanced microchip requires silver. It's the most conductive metal on the planet. There is no substitute. The U.S. government just took a 10% stake in Intel, calling it a national security move. Think about that. If semiconductors justify direct government intervention, do you really think the critical minerals that make them work aren't next? China has been stockpiling strategic resources for decades. Washington is just starting to catch up. This is supply chain warfare, and silver is on the front line. EV manufacturing, solar farm installations, close-ups of microchips and circuitry, news clip about the Intel deal. The paper versus physical breakdown. Now here's the critical tension. For years, the paper-silver market, the futures and derivatives traded by big banks, has kept a lid on prices. They've been able to sell paper contracts, effectively leaning on the price. But that entire system relies on one assumption, that anyone who wants physical metal can get it. That assumption is now breaking down. What we're seeing in China is a physical market revolt. When buyers in the world's largest hub are told to wait a month and pay triple the price, it signals a physical shortage that the paper market can no longer paper over. The last time silver's momentum indicators hit these levels, it ran from $26 to $49 in just 4 months. But the difference between then and now is staggering. In 2011, silver had a market surplus. In 2025, we are at a negative 200 million ounce deficit with a much higher industrial and monetary demand compared to 2011. In 2011, we had a surplus. Today, we have a massive documented deficit. When a short squeeze happens in a surplus market, it's a financial event. When it happens in a deficit market, it's a scramble for survival. This is what creates the chaos. A rush for physical delivery that forces the big shorts to cover their positions, accelerating the price move exponentially. We are testing $50, the previous all-time highs. So, where does this leave us? All eyes are on that key technical level, the 2011 high near $50 per ounce. Silver close to reaching the $50 level. If, or more likely, when, silver punches through that $50 level, it won't just be another milestone. It will be a breaking point. It will signal a failure of the paper pricing mechanism and confirm that physical metal is king. It's a powerful reminder that when the credibility of monetary systems wobbles, when governments intervene directly in markets, hard assets with real, undeniable utility become the collateral of choice. Silver is both money and a critical commodity. You can't print it, and you can't run a 21st century economy without it. The signals are all here: the supply deficit, the explosive industrial demand, the geopolitical stockpiling, and now a physical delivery crisis in the heart of the global trade. This isn't just a trade, it's a fundamental reassessment of one of the world's most critical yet overlooked assets. The squeeze is on. The only question is, are you paying attention? Thanks for watching. If you found this analysis valuable, do your own research, and we'll see you in the next update.